Holy moly, I walked in from the car this morning and I'm drenched. Yeah.
Yeah, the rain sure is coming down today, but anyway, we still need it, so we're very grateful. But anyway, welcome everybody. I hope you're going to enjoy the session today. Hein, thank you so much again for doing the session with us. And without further ado, I think I'm going to let you get started. So thank you so much, Hein. Much appreciated.
Michelle, can you see my screen? Did I share it properly this morning, considering that obviously Lani isn't here and whatever? Can you at least see my screen there?
Yes, I can.
Beautiful. Okay.
Perfect. All good to go. I'll be listening in, Heinz. If there's a problem, just shout. I'll try be your Lani for you.
Thanks, Michelle. Thanks a lot. Hi there, guys. Good morning. As Michelle said, I'm Hein from STBB Attorneys in Somerset West, a very, very wet Somerset West. I just want to have a look. That's obviously what we're doing today. We're going to talk about mortgage bonds, the different types of mortgage bond, what is a mortgage bond, and then the different types of mortgage bond. We're going to have a look at amended bond instructions. Sometimes on your matters, you will hear the transferring attorney or the bond attorney giving you a report or an update, just saying that, oh, the bond attorneys are awaiting amended instructions. So we're going to have a look and see why does that happen. And we're also going to have a look at building bonds, where a purchaser takes a building bond in order to purchase a property that is in the process of being built, and all the requirements associated then with a building bond. I just want to have a look just to see if I can. Yes, seems as if I can do it. So first of all, what is a mortgage bond? So you know that as soon as your purchaser requires a mortgage bond in order to pay for a portion of the purchase price, he will then go to the banks, or your mortgage originator will assist him in order to apply for bond finance. So the mortgage originator will get his salary slips and his bank statements and his income and expenses and apply to the banks for a bond. And then obviously there might be one or two or three banks that come back with a quotation to say, right, we are prepared as FNB or as Absa Bank, we're prepared to give this purchaser a bond of 2 million Rand. We're going to charge him 6.95% interest over 20 years. This will be his monthly repayment, etc., etc., etc. So your purchaser will then accept the quote that was provided by the bank. He'll sign it and he'll send it back to the mortgage originator. The mortgage originator will then go back to FNB to say, FNB, this purchaser has accepted the quote that you provided, the offer that you've made for this loan. He's accepted it. And then FNB will say, fantastic. What FNB then will do is they will send that bond instruction to one of their panel attorneys in order to attend to the registration of the bond. And the clients will then go in to sign the bond documents with the bond attorney. And one of those documents is a loan agreement that will be signed to say, yes, we loan the amount of 2 million Rand at 6.95 interest rate over 20 years and all these terms and conditions. So they'll sign a loan agreement with the bank. And in order to, a security of that loan that the bank provides now, so the bank is paying out 2 million Rand on behalf of this purchaser in order to go and purchase a property in terms of the loan agreement. But as security, the bank wants a bond to register over that property for the 2 million Rand, so that in the case where the purchaser fails to repay that loan amount, the bank can then go and foreclose on that property. So that is the reason for a bond. The bond is there to secure the loan that the bank has, or the money that the bank has paid on behalf of this purchaser. And if the purchaser doesn't repay or doesn't make that monthly bond installment, the bank can then get a court order against that purchaser in order that will allow the bank to sell that property in a sale of execution in order to recover the 2 million Rand or whatever amount the purchaser owes the bank to recover that amount of money back to them in respect of that loan. So the bond is vests with a mortgagee. The mortgagee is the bank, Standard Bank or FNB, and it is a real right of security against that immovable property, against that house or flat or vacant land or whatever the immovable property is. That is their security for giving this loan or this money to the purchaser to purchase that property. So when we have a look, we're going to have a look at different types of mortgage bonds. For example, the first one is a covering bond. In its purest form, it's a bond that is registered to secure a debt or other obligation that does not yet exist at the time when the bond was registered. So this isn't a normal home loan bond in order to purchase a property, which is in actual fact an indemnity bond, which we'll get to. But so for the covering bond, if I go to my bank and I say, listen, you guys, I would like to have an overdraft facility. I've got an idea to start a little business from home or wherever. I've got a little idea. I want an overdraft facility of 200,000 Rand. Just so that you can bankroll me, just so that you can give me money to start a business or to do whatever. The bank will say, that's absolutely fine. We'll give you that 200,000 Rand or whatever you need to start your business. But we require you, Hein, to register a covering bond over your house as security for this loan that we are giving to you. So when the bond registers so the bank might say, look, Hein, we know that you need 100,000 Rand or whatever, but in 10 years' time or 20 years' time or 30 years' time, you might need more money. You might need 500,000 Rand. So what we're going to do as the bank, what we're going to do is let's register a covering bond of R1 million over your property right now. So that amount of R1 million, I don't owe the bank that R1 million. So that is why it says here that obligation or debt doesn't exist at the time when the bond is registered. When that bond of R1 million is registered over my house, I don't owe the bank R1 million. That is just in anticipation of money that I might owe the bank in respect of an overdraft facility or a debt on my current check account or anything like that. So at least then I know that when that covering bond is registered for R1 million, I can go to my bank and say, listen, Mr. Bank Manager, can I please have 100,000 Rand as an overdraft? The bank manager will say, okay, that's fine. We've already got a covering bond as security for up to R1 million. So here we go. Take the 100,000 Rand and let's sign a loan agreement. How are you going to repay that and what is the interest rate going to be that you're going to repay it, and over how long will you pay it back? Will you pay it back over a year? Okay, fantastic. Then you pay it back over a year. But that facility of R1 million just stays there. It's just a covering bond. And then after I've paid off the 100,000 Rand, I can go back to the bank to say, listen, you guys, I've got another plan. I need another loan, a personal loan on my check account, whatever, for 500,000 Rand. The bank can say, okay, that's fine. We've got that covering bond of R1 million sitting there. So we are covered. So here's 500,000 Rand. You're going to pay it off over 10 years. This is the interest rate, etc., etc., etc. So it's just a covering bond for a future debt that might be there. And the debt might be there and then you pay it off. But the bond remains there. And then you get another loan or another overdraft and the debt then is created. You pay it off over the term that you guys have agreed to. But the facility R1 million remains there. But it's not as if you owe the bank R1 million. So a covering bond is a bond that serves to provide continuous cover or security for a future debt that's not yet here. You don't owe the bank that R1 million, but it's for possible future debt up to R1 million, for example, which the mortgagor or Hein may owe to the mortgagee, the bank, at any time in which that debt might arise by way of an agreement between them. So a bond of this kind secures a fluctuating level of debt. It's not for the R1 million. I might borrow 100,000 Rand today. Next month, another 200,000 Rand. I might repay that debt and don't owe the bank a single cent. But in a year or two's time, I might request another 500,000, whatever. So it's just a continuous covering security for the bank to secure any debt that I might owe the bank in the future that doesn't exist right now when the bond is registered. If we have a look at a kustingsbrief, a kustingsbrief is a special type of bond which secures the purchase price or the balance of the purchase price which is due to the seller of immovable property. This would apply in the case where the purchaser is unable to obtain a loan from a bank, and the transaction is then financed by registering a bond in favor of the seller. So I buy a property, for example, from my neighbor. I've got for R1,000,000. I've got 800,000 Rand in cash, but the banks don't want to give me a bond of 200,000 Rand. For whatever reason, I might have bad debt, I might be blacklisted, or whatever. So I can't get a bank like FNB or Absa Bank to give me a loan of 200,000 Rand. I then go to my neighbor and say, Mr. Neighbor, listen here, man. I want to buy this property from you for R1,000,000 Rand. Okay, I'm happy with that. That's great. I've got 800,000 Rand in cash, which I'll pay to you on transfer. But that 200,000 Rand, I want to pay that off to you over a period of 5 years or whatever the time period that he's acceptable or that he agrees to. My neighbor might say, Manan, I know you. I know you're good for the money. We've known each other for the last 20 years. You know what? That's fine. I'm going to sell it to you for R1,000,000 Rand. Give me the 800,000 Rand in cash on transfer of the property. And what we're going to do is we're going to register a kustingsbrief, a kustingsbond in the favor of the seller over the property, where I agree to pay him back the 200,000 Rand over the next 5 years at this interest rate or whatever. So that is what a kustingsbrief is. It's where the purchaser can't get a bond with a financial institution, and they come to an agreement with the seller that the seller will register a bond as security over the property. So if the transfer takes place and the 800,000 Rand is paid to the seller, and in a year's time, Hein doesn't make the repayment amount for the 200,000 Rand, the previous owner, the seller, can come back to say, Hein, you know what? I'm now going to attach this property. I'm going to sell it at a public auction in order to get my 200,000 Rand from you that you still owe me. So that's the reason for a kustingsbrief. If you have a look at a collateral bond, as the name indicates, is a bond giving additional security to a bank for a debt for which there is also security with the bank. So a collateral bond is usually registered to complement a principal bond, that is the current bond registered over a property. However, it can also be registered to complement a notarial or a surety bond. So a collateral bond is just extra cover. I might have a principal bond on my property, and the bank says, Hein, you know what, we gave you R1,000,000 Rand bond in order to purchase this property now. But, you know, we need extra cover. We're not convinced that, there might not be sufficient value in this property for that R1,000,000 Rand bond. So we want a collateral bond over your property in Hermanus. Register a collateral bond over that property as well, just in case we can't recover the debt from the existing bond. Then there's a second bond, a collateral bond over your Hermanus property. So we can go and sell your Hermanus property as well in order to cover your liability in respect of the principal debt. Then we also get surety bonds. A surety bond is registered by a third party to provide security for the debt or obligation of someone else. So let's say, for example, I go to my mom or my brother and I say, listen, you guys, I would like to purchase this property, but I don't have sufficient income, etc. The bank can then say, that's fine, let your brother stand surety for you. So if you don't make the monthly bond installment, then your brother is liable to repay that monthly bond installment. And what we're going to request him to do is to register a surety bond over his property. So he must register surety bond over his property in favor of the bank in order to confirm that you as Hein will make the monthly bond installment payments in respect of the loan agreement. So a surety bond is registered by a surety. It's registered by my brother. It's a third party. The bond is registered over his property. It's registered in his name in favor of, let's say, FNB. On behalf of Hein, the principal debtor, another person altogether to him for the repayment of the monthly bond installment. So what will happen is, if the bank gives that facility of R1 million to purchase the property or facility, and that bond is registered, and Hein doesn't repay that bond of R1 million, the bank will then turn to Hein's brother and say, okay, well, he's not paying, he's to surety, so Jean, you must now pay that monthly bond installment. And if you can't do that, then we're going to sell your property and we're going to recover the debt from your property because you stood surety for Hein and we've got a bond over your property. So we're going to sell your property to recover this loan amount that we gave to Hein that you stood surety for. So it's in favor of the creditor or the bank, of the principal debtor, which is Hein, in order to provide security for the obligations of Hein towards the bank. So that is a surety bond. But then Jean, my brother, might turn to Hein and say, Hein, you know what, I need an indemnity bond. So I, Jean, registered a surety bond over my property for you. I want you as Hein to register indemnity bond over your property in favor of me, because I stood surety for you. So if the bank comes to me and wants to sell my property because you're not paying your monthly bond, then I want an indemnity bond over your property so that I, as Jean, can then go and sell your property to pay the bank if you don't pay them, as opposed to the bank selling Jean's property. So indemnity bond is passed by the principal debtor, by Hein, in favor of the surety, my brother Jean, who carries the suretyship for the payment of the overdraft facility. So a debt by the principal debtor to a creditor. The bond is then passed by the principal debtor, Hein, as security to cover the surety for me over my property. So I register an indemnity bond in favor of Jean, my brother. So in my indemnity bond, Jean would be like the bank. I'll be again the debtor to Jean. So if anything, if the bank takes action against Jean, Jean can turn around and say, Hein, I've got an indemnity bond over your property. I'm going to now ask you to sell your property, or I'll force you to sell your property by way of a court order in order to cover that debt that I stood surety for you. There's also substitution bonds. This is normally the case. Let's say, for example, I'm married to Sari. Sari and myself get divorced. In terms of the divorce order, but there's a bond on my property and I own a property. So let's say I own a property in Somerset West. The property is registered in my name and I've got a bond with, let's say, Standard Bank over that property. I now get divorced from my wife, and in terms of the divorce order, I must give my wife that property in Somerset West. But how are we going to do that? Because there's a bond on the property. The property is not being sold, so we can't cancel that bond. So what will happen is I give the property to my wife. My wife will apply to FNB or Standard Bank, whoever's got the bond on the property, to be substituted as the debtor. She will take over the monthly payments in respect of that bond. So as it stands now, that property, the title deed is in my name and the Standard Bank bond is in Hein's name. The divorce order says I must give that property to my ex-wife. But now the bond is in my name. You can't have a bond over a property that doesn't belong to you personally. So in order for that property to be transferred to the ex-wife, we will have to go to Standard Bank to say, Standard Bank, will you please substitute my ex-wife and me so that she is now the debtor in respect of that mortgage bond? And again, the bank will go and have a look at the income and expenses of the ex-wife, because they can't just substitute her if she can't afford that bond. So it'll go through the normal credit process where the bank will ask for her income and expenses, her salary, her bank statements, and all those lovely things. And if she can qualify for it, that's fine. The bank will then consent that Sari is substituted. So Hein is substituted and taken out of the bond, and Sari is now the main debtor in respect of that bond. So a substitution bond substitutes an existing bond in other words, it takes the place of the existing bond, which bond is cancelled simultaneously with the registration of the substituted bond. It's actually just an endorsement, a Section 57 endorsement that will be on that bond to change the detail of the bond. So a substitute bond is passed, so that bond is passed by the same mortgagor or debtor as in the existing bond. So I pass that bond to my ex-wife, the same mortgagee or creditor, so it will be, FN or Standard Bank will still be the bank in respect, same as the original bond, exactly the same, but we will just change parties. For the same debt, so it will be for the same amount of debt or the same obligation. So if that bond was raised for 2 million rand originally, that bond will remain the same. It will pass to Sari, the ex-wife, for 2 million rand. So yeah, that is a substitution bond where you substitute one debtor with another debtor in respect of a mortgage bond. Strictly speaking, a substitution bond can apply to any transfer of any property. So even if I sell my property to another purchaser, strictly speaking, the banks can agree that that purchaser be substituted, that I'll be substituted with that purchaser, and that purchaser doesn't have to go and take out a new bond. But the banks don't like to do that. They want their bond to be cancelled, and they want the purchaser to register a brand new bond, because obviously the bond amount might increase or it might decrease, whereas a substitution bond, it's substituted for the exact same amount of debt. So it's very few and far between that the purchaser will require the exact amount of bond that you got when you purchased the property maybe 10 years ago, etc., etc., etc. So the substitution bond mainly comes into play in respect of divorces, where the new or the ex-spouse that gets now the property is substituted in the mortgage bond document as the new debtor in the bond. What is a participation bond? In terms of Section 52 of the Act, a participation bond is described as follows. It's a mortgage bond over immovable property. It's normally a bond over immovable property, which is commercial or industrial property, which is described as a participation bond. So the bond itself will say participation bond, and it's registered as such in the name of a nominee company. And it includes a collective investment scheme in the participation bond, which is a first bond or which ranks equally with any other participation bonds over that specific property. So what does that mean? I mean, that doesn't make sense to anyone. So what would happen is, I think a couple of years ago, there was a company or investment scheme called Fed Bond, and that is exactly what this is. Well, it's not a scheme. You know, a Fed Bond might have a bad rap, but there are other schemes like this. So what it means is you get investors that don't want to invest their monies in, let's say, for example, a 30-day call account or a fixed account where they get X amount of interest. What they want to do is they want to pool their funds together, Hein and Michelle and whoever. They want to pool their money together and invest in a company, like, for example, Fed Bond or whatever, in order to get monthly return on their investment. So what the company, Fed Bond or any other nominee company will do is they will then register a mortgage bond over a specific commercial or industrial property, and they will then charge the owner So it's obviously people that need money. So if I need to purchase a property, I can go to FNB or Absa Bank or whatever, or I can go to FedBond and say, FedBond, I want to purchase this property. Will you please give me a bond, a participation bond? FedBond will say, hey, that's absolutely fine. We've got money here in our kitty that investors have pumped into our little company. So what we'll do is we'll give you that money. We'll give you that 2 million rand that we've got here on behalf of these 20 investors. We'll lend you that money. We're going to register a participation bond over the property. So you, as the new owner or the purchaser, will now pay us, FedBond, the monthly installment. And what we then do is we take that monthly repayment and we share it between our 20 investors. So every month, our 20 investors will receive a payment every single month. So it's obviously a little bit more risky than investing somewhere else, but the interest rate is obviously better than what you would normally get if you invest your funds in a fixed account or etc., etc. So it's just another way for investors to invest in a company, and the company will then register a participation bond over the property, and the company will then share that monthly profits or monthly payments that they receive from the owner with their investors. So from the above definition, it is clear that a participation bond can only be registered over immovable property. Yes, obviously the bond is over immovable property, and it is normally commercial or industrial property. It must be clearly described as a participation bond on the bond document that will register at the deeds office. It must be registered in favor of the nominee company, the company that was created by all these investors, all the investors invested into it. It's in a company, FedBond or whatever the company's name is. It will register in the name of that company. And it must be a first ranking bond, or it may rank pari passu or side by side with another first participation bond over the property. If we have a look at private bonds, sometimes, we don't qualify for a bank from the banks, FNB or Absa or Nedbank or Standard Bank. We don't qualify as a purchaser for any of those bonds. The current owner of the property is not prepared to provide a customs brief where you then owe him the money and repay him the money. He's not going to say, no, it's too risky for me. And you know what? I need my R1 million, the selling price. I need it. I need it immediately because I need to purchase another property or for whatever reason. So no, I can't allow you to register a customs brief over the property because I can't wait to get my R1 million over the next 10 years. I need it now. So customs brief will also not work. So what you can do then is you can obviously go to mom or dad or brother or whoever, a friend, and say, listen here, I need R1 million. The banks don't want to give it to me. The owner of the property needs the money. He's not going to allow me to register a customs brief over the property. So please, will you lend me R1 million? My brother or mom or dad or friend will then say, that's fine, we've got that cash money. So we will lend you, or I will lend you that R1 million, but I want you to register a private bond over your property in the name of the friend or the brother or the mom. So the bond will register in their names, so they are seen as the bank. You owe them, but it's in their personal capacity. It's a private bond. The financial institutions are not involved at all. It's a private bond between private individuals to register over that property. So if I get a loan of R1 million from my mom in order to pay for the purchase price, I will then register a private bond in my mom's name over my property, confirming that I owe her R1 million. If I don't pay her the R1 million back as how we agreed, how I will pay it back between the two of us, she can go and attach the property and sell it at her auction in order to get her R1 million back that she lent to me. So that's the idea between a private bond where the financial institutions are not involved, and you are lucky enough to have friends or family members that's got the cash to lend to you. Then you register a bond in their name over your property. When, obviously, and this is what we spoke about earlier, there are certain scenarios where you will hear from the transferring attorneys or the bond attorneys that they are awaiting amended instructions from the bank. So what would happen is, originally when the bank approved your purchaser's bond for him and the purchaser has accepted the quote, the bank will then send that bond instruction to one of their panel attorneys to attend to the registration of the mortgage bond on behalf of the bank. Now, that instruction that bond attorney will get will set out, for example, the full names of the purchaser, the ID number of the purchaser, the marital status, the property description of 2695 Somerset West, or if it is a sectional title, it will be section number 2, Bella V, exclusive use area, garage, G6. So it will set out the property description. It will also set out, for example, the date of the sale. So on the 18th of August, the offer to purchase was signed. So the purchaser purchased this property for this amount of money on the 18th of August. So that's the information that the bank will then send through to the bond registration attorney. Now, what would happen? So let's say, for example, there's incorrect detail. The bank didn't send through the full names of the purchaser. The ID number was captured incorrectly. The digits might have been switched around by accident by the bank when the bank captured the detail of the purchaser. The marital status might be incorrect. The guy is married out of community of property, and the bank sent information through to the bond attorney saying that this purchaser is unmarried, or the earth number is incorrect, or if it's a sectional title unit, section number 2, Bella V. It doesn't make any mention, that instruction doesn't make any mention of the exclusive use garage that also forms part of this purchase of this property. So there are various reasons why the instruction might be incorrect. So the bond registration attorney cannot continue with that registration process, with the registration of the mortgage bond, until such time as they have requested the bank to send the amended instruction to show the bank, hey bank, you got the name of this guy wrong, or you got the marital status wrong. He's not unmarried, he's married out of community of property. You must please amend your instruction. Send us an instruction that is correct with the correct ID number or marital status or whatever. So that is the reason why the bond attorney, when you hear, oh, they're awaiting amended instructions, it's for one of these reasons. The bank originally sent the instruction to the bond attorney, and the bond attorney picked up that the ID number is wrong, or the marital status is not correct, or you misspelled his surname, or whatever. Then the bond attorney must get an amended instruction from the bank before the mortgage bond registration attorney can proceed with the registration of the mortgage bond. So examples of amendments, there are a couple there that you'll see that I've already mentioned, but these are the main things that the admin people at the bank sometimes get wrong. So it's just an administrative error that they just need to rectify. So as I said, marital status is often an issue. Incorrect name or surname, incorrect property description. So the instruction from the bank to the bond attorney said that the bond attorney must register the bond over Earth 911 Somerset West. But the Earth number is actually Earth 119 Somerset West. Then the bond attorneys will request the bank to send an amended instruction to rectify their records. Interest rates. So when we sign the bond documents with your purchaser, sometimes they come in and we go through the loan agreement. Right, Mr. Purchaser, you are getting a loan of R1,000,000 from FNB. In terms of the interest rate applicable is 7%, which is the base rate, 7%. Sometimes the purchasers say, no, no, hang on. The bank made a better offer. That was not the interest rate that I agreed to when I signed the quotation, when I accepted the offer. I know that there was talk of 7%, but the mortgage originator fought for us and she actually got it down to 6.5%. And that is the last correspondence that we saw from FNB was that they will give us the bond at 6.5, not 7%. Then we have to stop signing all the documents. We have to go back to FNB, for example, and say, FNB, this instruction that you've sent through to us to sign up with these clients says that the interest rate is 7%. The client has now advised us that this is incorrect. The interest rate is actually 6.5%. They've got communication from you confirming that you've agreed to 6.5%. So we'll need an amended instruction. So then the bank will go, they'll amend the interest rate, and they'll send the new instruction to us with the correct interest rate. Names of entities like trusts and CCs and companies, they can get the names wrong as well, or the registration number. Very often the exclusive use areas are not included in the bond. So this is obviously for sectional title units. So when the bank sends the instruction to the bond attorney, the instruction says that the bond must register over section number 2 Bella V. It doesn't make any mention of an exclusive use garage G6 or a garden G5 or whatever. And that is incorrect because the bond must register not only over the flat, but also over the exclusive use areas in the scheme. So then the bond attorney will write back to the bank and say, bank, you got it wrong. The bond is not only registering over the unit, section number 2 Bella V, there's also a garage and a garden that the bond must register. It must register over the entire property. And then the bank will get and do the amended instruction, including the exclusive use areas, and then send the instruction, the correct instruction, then back to the bond attorneys. Insurance requirements. Sometimes for the homeowner's insurance, the client will tell the bank that I don't want to take out insurance or the bank's insurance over the property or structure. I want to seed my own insurance. I'm with Santam Insurance for the last 20 years. I get a very good deal with them because my cars are with them. My internal household effects, my cell phones, my laptops, my wife's rings, everything is insured through Santam. So I can get a far better monthly premium from Santam than what you as the bank can give me through your own insurance. So I don't want to take your homeowner's insurance over the structure against fire or flood because I can get a better premium or monthly payment from my own insurance company. So if that instruction doesn't say that the client will take out his own insurance policy, if it says the client will be taking Nedbank's insurance policy, that's not right. The client is not taking out Nedbank's insurance. So the bond attorney will go back to the bank to say, no, bank, the client is not taking Nedbank or FNB's insurance. The client is taking Santam insurance. Then the bank must amend the instruction to confirm the client will take out his own homeowner's insurance or life cover. If it's a condition of life cover, that the client will take out his own life cover. And obviously that will delay the matter slightly because the bank, it goes back to the bank. The bank will amend their records or get the information correct in order to send the correct instruction back to the bond attorneys. But that takes maybe between 5 and 10 working days. So between a week minimum up to 2 weeks in order for the bank to send the correct or amended instruction back to the bond attorneys to proceed with the registration of the bond and signing of the bond documents, etc., etc. So that might delay the process a little bit. If we have a look at building documents, there are There are two types, obviously. If you buy a property turnkey, so turnkey means that it's a new building, a new house that was built by a developer, but it is standing, its roof, you can get the key. So when you take transfer of that house, you get the key on that same day, and you can move into the house. The house is already built. Or sectional title schemes as well. You as a purchaser can only get the key to that property once it has been completely built and there's an occupancy certificate for you to actually move into that property. So when we have a look at sectional title schemes or turnkey, that property is already built and you will move into that property. So when the transfer registers, the structure is done. You can move into that property on transfer of the property. The banks require, there are certain conditions, and the banks require certain things from the purchaser, and which the bond attorney must provide to the bank. Okay, so firstly, that builder that built that structure, the house or the flats, must be registered with NHBRC. So the bank wants to see the builder's valid NHBRC registration certificate. The bank also wants to see that that building or structure has been enrolled with the NHBRC. So they also want an enrollment certificate. So you'll often hear that the bank requires the builder's registration certificate to confirm he's registered with NHBRC as a builder. And the bank also wants the enrollment certificate, the NHBRC enrollment. What is the difference between the two? The enrollment certificate means that the builder has enrolled that specific property with the NHBRC. So what it is the builder will pay a fee to the NHBRC in order to enroll that specific building or structure that he was built with the NHBRC. It's almost as a little insurance policy to the bank, because the bank knows the reason why the builder paid that enrollment fee to the NHBRC. If the builder disappears tomorrow after the transfer is registered, the NHBRC will come out to the building and rectify small little defects in the property within the first 3 months when those small defects came apparent. So it's almost like a snag list. The NHBRC will take over the snag list if the builder or developer has disappeared after the transfer has taken place. And that is why the builder will enroll the property. There's a fee paid to NHBRC to cover the NHBRC in order to come and rectify these things on behalf of a builder that has now disappeared and that doesn't want to do the snag list. So for minor rectifications or minor little defects for 3 months, the owner is covered. The NHBRC will come to fix that. The roof, any damage in the roof is covered for up to a year, and any major structural defects like foundations, etc., is covered for a period of 5 years. And the fee that the builder will pay to the NHBRC varies. It's very similar to transfer duty. It's like a sliding scale. So I printed it this morning. So if the value of that property is between 0 and 500,000 Rand, the fee that the builder will pay to the NHBRC to enroll that property is 6,500 Rand. Between 500 and a million, it's 11,500. Between a million and 2 million, it's 19,000 Rand. Between 2 million and 5 million, it's 34,000 Rand. So that's the enrollment fee that the builder will pay to the NHBRC to enroll the property. So if he disappears or whatever happens to him and he can't fix defects, then the NHBRC will employ their own contractors to come and fix the property, because they've got money to secure those things that they must rectify. The bank might also require, so those are the main things that the bank require, and obviously the approved building plans. So the builder's NHBRC registration certificate, the enrollment certificate, the approved building plans, the engineer's report or certificate regarding the structural safety or structural stability or integrity of the structure. They'll also might require the electrical compliance certificate, electric fence, if it's applicable, a plumbing certificate, if it is in with the municipality that requires a plumbing certificate, a roofing engineer certificate, a gas certificate if it's applicable, and an occupancy certificate, which is issued by the municipality to confirm this structure has been completed and there are all services, there's sewage, there's water, there's electricity, and any person can occupy this property is safe to be occupied and livable. So those are the certificates that the bank might require, will require, in order to approve such a turnkey bond. Sometimes a turnkey bond is not applicable. You buy a plot and plan, so you register a building loan with a bank, you buy a plot, you've got a contract with a developer to build your house for you, obviously in stages. So you need to get a bond with a bank that will pay that builder when he's floor level, he will get a portion of the money that is owed to him in terms of the building contract. If he's roof level, he'll request another interim payment, and he'll get paid by the bank. And so it goes on until the builder has been settled in full for what is owed to him in respect of building this property. So again, the bank will require a copy of the builder's all risk insurance policy to show that he's got his own insurance. If anything happens to this property while he's building it, if any material, bricks, water, cement, pavers is stolen, his insurance will come and replace it. The builder will provide his registration certificate to confirm he is a registered qualified NHBRC builder. Again, the enrollment certificate must be provided. The bank wants to see that there's enrollment certificate. So if the builder disappears, then the NHBRC will come and sort out any issues, defects, problems with the property. Minimum spec and waiver of lien, it's a document that the owner and the builder will sign. It's a bank document whereby minimum specifications, it's between the bank, the owner of the property and the builder, whereby the builder confirms to the owner and the bank that he's a registered NHBRC builder and he is fully aware of the minimum specifications or requirements set by the NHBRC for a building to be built. So it will set out, for example, the minimum depth of foundations, the minimum width, the minimum amount of thickness of the cement for floors or that. So the minimum spec, he confirms as builder to the seller and the bank. He knows what the minimum specs are and he will build the property to the minimum spec, at the very least, to the minimum specifications that are required by the NHBRC for this property to be built, to be sound. The bank will need a copy of the building contract because the bank would want to see, okay, Hein, you're going to build this property. You're going to use MD Construction to build it for you. Where's your contract with MD Construction? How much is this? Where's the building plan? Let's see what the building is going to look like. Where's the building contract? We want to see how much are you paying for this building. We want to see the schedule of finishes. What type of tiles are going to be there? What is the roof finishes going to be? Is it going to be IBR? Is it going to be slate? Is it what is it going to be, so that the bank can do their calculations and see whether, yes, this building and these specifications in terms of the building contract, how he's paying 2 million rand for this building. Can we give him 2 million rand to build this to build this building? Is it maybe far-fetched? I mean, the value of this building is 1 million rand. So no, we're not going to give you a 2 million rand facility to build this property if we, the bank, can see from the building plans and the building contract and the schedule of finishes that the value of this property is only going to be 1 million rand. So no, we're not going to give you 2 million rand. So that is why the bank need the building contract, the approved plans, the schedule of finishes to see whether there's value in them giving 2 million rand for you to go and build this property. They'll also need the surveyor general diagram setting out the property, and it will show where the building is on the property and all those lovely things. So those are the requirements or the documents that will be required by the bank in order for the bank to approve a plot and plan build, where the bank will pay out when requested to do so by the builder or the developer, the interim payments to the builder or the developer. So those are pretty much the different type of mortgage bonds that we can get over property. We had a look at private bonds. We had a look at all the issues that might arise with receiving amended instructions from the bank. And then obviously there are building loans as well, with more requirements over and above the normal requirements of the banks. All these NHBRC requirements are also must be complied with in order for the bank to apply to approve that bond. And that is it. So thank you so much, guys, for listening to me. Thank you, Michelle, for arranging it. Thank you. And you obviously know where to track me down. So if you need to ask any questions, please feel free. Good morning, Blauberg. And everyone there, if you've got questions, please feel free to email me. Yeah, I think Michelle is ready to rock and roll with her update. So if you've got